All eyes are on Wall Street this afternoon after the Dow does a nosedive of more than 1,600 points.
The markets are responding to President Trump's tariffs, and it's going to hit everybody's wallet and investments. Craig Balanos is the co-founder and wealth advisor at VestGen Wealth Partners in Inverness and Downers Grove, and he's joining us now to talk more about this. Craig, thanks for being here.
Lord, it's been good to be with you, but a tough day for investors across the globe.
Let's talk big picture here, macro, and the markets, and specifically how people's retirement portfolios, their IRAs, their 401s, is this the new norm? Are we done with this free fall yet? Where are we going?
Well, you know what? Uncertainty breeds volatility. And with a lack of clarity on trade, I still say there's a lack of clarity on trade. It's tough to assess where the economy is going to be. It's been very probable that we wouldn't have a recession, but if the trade and tariffs are more draconian, as they appear to be right now, then that possibility of a recession becomes much more real. But for long-term investors, I think the future is still bright investing in great companies of America.
Yeah, and anytime we talk to you, you tell us stay put, things will turn around, you just have to wait it out, right? That's the same advice you're giving this time, I imagine.
Well, you know, I put it in perspective. Yes, the Dow lost 1,700 points today. Yes, the S&P 500 down nearly 5%. But the reality is, look at how far we've come in a short period of just 2 years, in 23 and 24. So now is not the time to panic. I think it's the time to look within and seek strategy and counsel.
You know, we've been told that it's going to take years to bring these manufacturing jobs here to the U.S. if that ever happens. But in the meantime, people are going to feel it in the pocketbook, some $3,000 to $4,000 on average per household. How does that translate to like stretching that dollar, going to the grocery store?
Well, I think that's an accurate statement. I think the average American has been told by the president to be prepared for some short-term pain in the hopes of long-term gain. And you're right, we're in a place now where this isn't going to be unraveled in days or weeks. It's going to take months. It's complicated. And I think, what does that mean? I think when people go to the retail shopping store, that's the grocery store, the place where they buy their consumer staples, people are going to have to pay more money. And that means everybody who is on a fixed income is going to have to get comfortable with the B word, which is budget, telling their money where to go instead of wondering where it went. Everyone's going to have to be more intentional.
Okay. I want to talk a little bit about tariffs specifically, because I think there are some economists that would say, look, the tariff system has not been fair for decades, for years, right? There is a place to impose higher tariffs on some of these foreign countries, but perhaps this wasn't the way to do it. Is there a way where this would have worked, or this would have caused less pain, I guess, for the average consumer?
Well, that's an editorial now because we get to see the results. But yes, it has been anything but fair and equitable trade, anything but open trade for years. And roughly speaking, the announced tariffs are 50% of the partner country's alleged rate. So the reality here is, yes, there is a way to get to better trade. I think the issue is not so much the tariffs. The issue is the chaos in the way the tariffs have unfolded and the rhetoric that's associated with it. That's what's breeding the additional uncertainty that's showing up in people's 401k balance today.
Got time for one more question. There is some concern about stagflation, which is a combination of a recession and inflation. That's a worst case scenario. But what do you tell people to do here in the short term?
Well, the good news is thus far, we haven't seen any indication that we're going to enter into a period of stagflation. That would be a period of rising prices with slower economic growth. But certainly I understand that the fears are aligned around that concept. Tomorrow's going to be a big day, Ben and Lourdes. We're going to get the jobs number before the opening bell creates. And I think we're all going to be taking our cue from the outlook of earnings. But I remind people of two quick things. One, don't ever underestimate the American consumer. We as a citizen and a consumer are resilient. And two, don't underestimate leaders of great businesses. They have a way of navigating the waters and pivoting to continue to make profits. And if you're a long-term investor, you got to look at that reality and embrace it.
All right, such great insight. Thank you so much, Craig Balanos, for joining us today. For more information, you can visit getretiredstayretired.com.